I made over $50,000 last month trading meme coins with a strategy so boring most beginners won't even try it. In this video, I'm going to be breaking down the exact strategy I've used to make multiple six figures from the trenches and go through everything from my trading setup to how I find my coins. So my wallet should be on the screen right now, as everyone talks profit on the internet and no one shows the actual wallet. That was the wallet that I used last month. As you can see, it has over $50,000 in profit on it. I'm not going to act like every day was green. We did have a couple red days in there. And I mean, I'm not some kind of freak either. I'm 16 years old. I still go to school full time. I just trade when I get the chance. Now, before we get into the strategy, I got to show you why it works and explain why I actually switched to the scalping strategy, which is the strategy I'm going to be showing in this video. Obviously, the number one thing is consistency is key in dead markets. The market has dried up so much since December and January times when Trump coin and all the volume was coming around. So you're going to have to change your strategy with the market and with the times to keep up and stay profitable. This goes on to the next point, that it doesn't rely on 1 million plus runners. This strategy, you can make so much money with just 300k toppers, 100k toppers, as it doesn't rely on 1 million plus runners, which is perfect for this market that doesn't have many multi-million dollar runners, which you would need if you're blasting size or you're holding for 100x opportunities, which also means you can trade any hours of any day. So if you're from Asia, if you're from Africa, if you're from Europe, you don't have to just trade in the US hours where the most volume is and the most runners are, as it is equal opportunities all hours of the day. And I would almost say that EU hours is almost better for this trading strategy rather than NA hours, just because the decreased volume makes it easier to spot the runners. Another reason why I started using this strategy, it has the best risk to reward. Risk to reward is the best thing in trading, and by far the most important thing in trading, as that means how much capital you're going to risk for how much reward. This means you could enter with $100 with this trading strategy and you can easily flip this up to $2,000 without the risk of losing 70% of your portfolio in drawdown in the meantime. Because this strategy doesn't have any drawdown, it goes straight up and it's very consistent regardless of your portfolio size. You can do anything from $100 to $10 to $10,000. It doesn't really matter how much you have in your portfolio, as you will be usually using a very small portion of this amount. The final reason why I use this strategy is because lots of tokens traded equals lots of opportunities. This strategy, you can trade up to 100 to 300 tokens a day, and is the exact strategy that Cupsy and other people like Centered and Creo use to stay consistently profitable in the trenches and make over $50,000 a day trading so many tokens, rather than blasting 10 tokens a week where you rely on the very big runners that go 50 million market cap, which doesn't happen sometimes for months and months on end. You do not need that with this trading strategy, making it by far the best strategy I have used in months of the trenches, and actually led me to my first 100k month and multiple 100k month in January and February. Now you understand what this trading strategy is, you need to start getting set up with the trading bot and everything else you need to actually start implementing the strategy into your trades. Obviously, first things first, like usual, I'm going to run through it very quickly as you've heard it 100 times over. You need to download Phantom Wallet extension, transfer Solana from any exchange into this wallet extension. It doesn't really matter how much, as I would recommend over $50, but yeah, any amount does work. Next thing you need to do is go into the description below and sign up for Axiom.trade. It is the website you're going to be using to make all your trades and has all the features you need to actually start implementing these scalps and know what you're looking for in each coin, and is by far the fastest trading terminal at the minute. Once you're on there, you just want to fix up your settings. If you don't know what settings you need to use, I'll pop up a video in the top right corner right now for my full Axiom tutorial. But then we'll go into the next bit. Right, so now you're on UPES, you're going to want to set up your filter real quick as you are on Axiom. You're going to want to turn all of these on. You can turn pump off, you can turn radium off if you want to. It's all personal preference. But for filters, we're just going to be using a very low 5.555 market cap filter. You can also put this down to 4.55 or even turn it off if you're trading during low volume times. It just helps during US hours if you just have a very small filter to filter out the shit relaunches, all the AI launches and things like that. The next filters you're going to want to use is in the middle tab. You're going to want to turn on just the audit filters, you're going to want to turn on 51% snipers, 51% insiders, and 51% bundles. This gets rid of all the crash game coins and things like that you just don't want to be seeing at all. Once again, turn on all of these. You want to be seeing as much things as possible so you can actually find as many coins to trade as possible. Then go into the migrated tab. Once again, all of these on, then metrics, just minimum 14,000 market cap, and also minimum 3 SOL global fees paid. This gets rid of any crash games and instant rugs when the dev just does a really big buy and then splits it up between different wallets. Now you have all your basic filters set up. You actually have to understand what you're looking for in the coin and what types of coins you're going to be trading, as you won't mainly be going for these migrated tab coins. You'll be mainly going for new pairs and also final stretch coins that you're hoping will go over to migrated so you can sell for a small bit of profit. Now for this strategy, all you're going to be doing is chasing volume. The best people that do it is Cupsy, which everyone knows, and Centered as well. They were both used to be pro gamers, so they're very, very fast. The two things you can take away from the trading styles, this is their daily P&L. Cupsy's up $50,000 today with an average hold time of 15 seconds. So you want to be keeping your hold time low, and you want to be keeping your win rate high with a lot of tokens traded. So the higher your win rate, higher tokens traded, and the lower your hold time, the more chance you're going to work out with strategy. Obviously, you won't be hitting $5,000 P&Ls back to back like this when you first start, but this is what you're going to be aiming for with this strategy. High percentages, as you can see, percent high, with little initials and low hold times. As you can see, every single one of these is under 2 minutes hold time with multiple $1,000 profit made. Similar here with Centered, you can see $7,000 made, 900% profit, $2,000 made, 65%, and a lot of other high percentages with little initial capital on the investment and a low hold time. Centered even does have a lower median hold time than Cupsy, but does have a lower win rate as well with more tokens traded than Cupsy, so he does have a little bit less ROI. Obviously, these people do have a few copy traders, but you can definitely turn over $5,000 to $10,000 every day with no copy traders or anything like that, exactly how I did just like last month. Now I'm going to show you a quick case study on exactly how this strategy works, and also a time me and my friends implemented this on a coin. This scalping strategy makes you catch coins very, very early. As you can see, multiple entries under 20,000 market cap, and then you can see an actual entry where you held with a thesis over here. When you're looking for entries, you want to look for obviously narrative, but not trying to hold to the top and not trying to time the tops. As you can see, there's lots of sells on every single green wick here, and he did actually miss the top of the coin, and it did pump once again over here, but he already made over 30 Solana in the process just because he sold very, very early, trading based off the narratives and the wallets in the token. If we go a bit deep into the narrative, we can understand how he got this 20k average entry and why he actually chose to hold it after migration. With this scalping strategy, you need to really distinguish between the PvP coins with lots of KOLs and lots of tracked wallets in. If you turn on tracked wallets here, you can see there was not many tracked wallets in pre-bond, so that led him to hold a lot longer. If there's lots and lots of tracked wallets in pre-bond, it usually means there's lots of PvP, lots of KOL supply, lots of stream, and people aren't really messing with the coin. If the coin's good enough, it'll go just off random buys, and then the tracked wallets will come in later. The tracked wallet should be your exit liquidity, and you should be selling on them. If you're buying on top of tracked wallets, you're usually already too late onto the coin. Now, if we go into actually doing the research for the coins, you can see here, this coin was a pretty simple setup. It was a test coin already launched that had bonded. So obviously, if you see a migrated dev, you want to be doing research on what the coin was, as if it was an actual project. As you can see here, this one went to around 150k market cap, and it was called Test. So it definitely interested me and my VC that I was in at the time. You can see the coin was linked to a Twitter with over 50,000 followers on it. So it was definitely very, very interesting. And then they started tweeting about the coin, and they have another coin called Anon that is at around 20 million market cap. So it was very, very bullish that they in turn launched a coin, and they did confirm that through replies. Usually when you're using this strategy of scalping, you're going to be bidding on speculation of future attention. The speculation of future attention is what you're going to be bidding. You're not going to be waiting for confirmation of these accounts replying or tracked wallets buying in, as if you buy then, there's no more speculation and the coin is usually already too high to get very good risk to reward. Now you have to understand bidding off narrative versus bidding off chart. There is two types of charts, obviously bad versus good charts. The first one is way too many KOLs in too early. This is a chart that ran to 1.1 million. But if you see here, all the KOLs were in before pre-bonding. As you can see, Rat Wizard here, Porterbog here, Euros here, Cupsy here. All these people in really, really early, leading the coin to have a massive, massive shakeout before it ended up having this second run over here, all the way down to 6,000 market cap, just because there was too much PvP. And KOLs bring eyes to a coin. If there's too many eyes on a coin without any motion on the coin, so if it doesn't go straight up, you know, to 200k plus with all these KOLs in the coin, it usually means that there's got to be no future attention, or it's a bad coin, or there's a shakeout before the pump for a redistribution of holders. Basically, if a KOL sells, obviously there's going to be a big candle down. As you can see, all their copy traders sell after them. So when lots of KOLs are buying up a coin, all their copy traders buy it up to bonding, and then it usually PvPs around the 20 to 50k range. So this is the most dangerous range you don't want to buy in meme coins if there's lots of KOLs in the coin. That's one of the importance of tracking so many wallets. Now a good chart would be something like this. This is the intern chart right here. As you can see, the coin migrated here with only one KOL that was in pre-bonding, but he instantly sold. This usually means that there's lots of bundles in, or there is lots of regular traders that aren't gonna like rape the chart and make it a really, really bad chart like this. As you can see, this is Letter Bomb here. He's selling very, very aggressively, as regular traders have a lot less chance of selling aggressively. The first buy was here after migration, which is very normal for a coin, but pre-migration, the less buys from KOLs, the better. As long as the KOLs don't hold the coin, like, you know, Rat Wizards, the Cupsies, the Centers, you don't want them in your coin pre-bonding, as that is a very bad indicator, and an indicator that the coin's just going to go sideways before dumping, and then whether it pumps after that depends on the coin's narrative that is behind it. As I said, the KOLs bring the eyes to the coin, so if the KOLs buy later, there's going to be regular traders that buy it on top of them later. So the first KOL buy was here. As you can see, there's lots of buys once other people started seeing the coin. There's Letter Bomb here, there's Cupsy here, there's Juicy Fruits, there's Lek there. There's all these people buying up the coin after the first KOL bought, as nobody had seen the coin before or had any info on the coin. Now, obviously, chart is just something that's going to play into the narrative. The narrative is the most important thing about any coin. The narrative is basically what the coin's about. You want to be betting on current speculation of future attention with the scalping trading style. This means that if you think there's going to be interactions from the account, as you can see here, it was a random type of coin that was obviously not their main coin, but they did launch it, so there might be future plans with it, and the actual main account interacted with the coin after the coin had migrated and people were asking about them. So they're like, why not pin the CA to the top? If your first CA can't break through 1 million, then who will participate in the platform in the future? Whatever. They're saying that their coin was theirs using this intern right here. So you can definitely see that there's future attention from the main people of the coin, which is very, very bullish in the coin. As you can see, interactions lead to jumps in price, whether that be interaction from like a project or it be from Donald Trump or something like that. The next way that you can spot a good narrative, if the narrative can grow. As you can see here, World War III. This coin was actually sitting at quite a low market cap for quite a long time until Donald Trump tweeted about World War III. He was kept on tweeting about World War III, and he hopped on a Spaces talking about World War III, so this coin ended up pumping. As people are speculating on World War III, there's lots of regular people attention. As I said, meme coins is just a bet on current speculation of future attention. So once the future attention comes, you want to sell the coin. Is that exactly like it does here? The coin's at 500,000 market cap. That's when you want to be selling, and you want to be buying if you think there's current speculation of future attention, and just selling once the future attention comes. Now, before we go into the next example, I'm just going to show you some of the more general tips for consistency. So when you're doing this, you want to be thinking in risk to reward versus price. Risk to reward, obviously, as I said before, is your risk versus reward. So if you think that the coin can only go to 100k, if you're buying the coin at 50,000 market cap and you think it can only go to 100k, the risk to reward is only 2 times. But you can lose 99% if you're buying at 50k of your port, as there is lots of people that bought before you. But if you're buying at 5k and you think it can go to 25k, it is very, very good risk to reward, as this is a 5x. And at 5k, there's not that many holders, so you can only lose, say, 20% of your buy-in amount. So it is very, very good risk to reward, where you're risking less money to make a larger return, as the percent it can drop by is much lower than over here. If you buy at a higher market cap, the percent you can lose is much higher, as there is a lot of people that bought before you, and the amount that you're aiming to get is also much lower, being a 2x instead of a 5x. Although if you think it is at 100k, but it is confirmed to be launched by Ben Pasternak, for example, which is already a very known developer in the space and has a coin over 100 million market cap, the risk to reward is there to be buying at that price. That's because even though it's at 100k, you can lose 99%. But if he does, tweet about it, the coin's instantly going to wick to 10 million and you're going to get a clean 100x on your money. So it definitely is there to be putting, a couple SOL at it, a couple small bit of your portfolio at it, because there is a chance that he can confirm it and it will be something integrated into his system. This goes to for any narrative. If there has a very high roof on it, going past the general bull posts on Twitter of people saying coins can go to billions, you have to be very realistic in what you're looking at. If you're not realistic in what you're looking at, you are just lying to yourself and you will lose a lot of money. Now, another example of this is, even though if it's at 20k, which is 5 times lower than 100k market cap, but if it's been done 20 times and it's bundled, the risk to reward is not there, because this coin obviously hasn't run 20 times. Why would it run the 21st time it's launched if there's nothing different about it? So low price does not equal good risk to reward, although it can. You have to think about what the coin would top at if people start catching onto it, compared to the price that it's currently at. So people saying that you need a 2x with size, say at 5 million market cap, all of that is a large psyop to make you your exit liquidity. You want to be aiming at minimum 5 to 10x. So if you don't think you can do a 5 to 10x, or even just like a 4x, that's fine as well. So if you're buying something at 50k market cap, and you don't think the coin could go to 200 to 250, then you shouldn't be buying the coin at all. Now, as I said before, you shouldn't be looking into Twitter bull posts, as they are just psyoping and manually editing your conviction on things, so you can buy on top of them that likely had a very early entry with lots of percent. So you need to make your own conviction and not listen to other people, whether you think the coin can go to this market cap here, which is 5 to 4x past your entry. 2x's with size, as I said, is a large psyop to make you exit liquidity, and in the long run doesn't work, as it is a high risk, high reward type of strategy. So you need to be aiming for high percentage gains on the wins to make up for the losses you're going to have, because it's actually very hard to have an over 50% win rate like some people do. Now, there's 2 more tips that you can do to keep yourself consistent with this. You want to be making your own spin on the style. Not everyone's good at new pairs, not everyone's good at 10,000 market cap, not everyone's good at high volume, not everyone's good at low volume. You have to make your own spin on the style. So if you're good at finding TikTok coins early, keep buying them. You have to figure out what is your top P&L. So say you made 3k on a TikTok coin, you want to continue buying these TikTok coins until it stops working, as if it's not broke, why would you fix it? Now, if we go over here, you can see I analyze every single thing I do every single day in my free Telegram. Obviously, you can join that if you want to, but it is just a journal for me. So I work on every single thing. So I miss prime hours, I did this, I did that. I need to work on my small patterns that I'm catching on to. It helps me analyzing what I'm good at and what I'm bad at, and keep replicating what I'm good at to keep on turning a larger profit. Analyzing my plays and journaling my plays every day really helps me find what I'm good at mostly, so I can double and triple down on it. So say I was buying TikTok coins, as I said before, if I'm buying TikTok coins, I might buy 2 times the amount of TikTok coins, or I might size in 2 times the amount. So if I was buying 1 SOL, I'll start sizing in 2 SOL if I can tell that they're working, and that's the main sort of play that I'm really good at. As I said, you can't just copy, Orange's trading style, you can't just copy Cupsy's trading style, you can't just copy Scented, you can't just copy my trading style. You have to build your own trading style around something that works. So finding what you're good at is the most important thing to actually start winning in the trenches. Now, the last thing that will keep you more consistent is risk managing. And when you think you're under risking, risk even less. So this means, say you have 10 SOL, you think 0.5 is risk managing a lot, and that's your first initial amount that you're going to start aping. When you're learning, halve it again. Make it 0.25 you're aping, because the less you ape, the less chance you have to lose. Obviously, when you're learning, there is a tuition fee in the trenches. You're going to lose a lot of money when you start learning. So if you want a basic risk management strategy, you can just copy this one, 20% vault up here. Just pause the video. You can read everything it says. You've got a main bag, which is 60%. And then you got your trailing the trenches bag, which you use first, and it is 20% with 10% buy-in, 5 to 10%. Same here, 5 to 10% buy-in. Scale your sizing, be selective, learn from your losses. The most important thing, as I said, is learn from your losses. This vault here should only be used as a very last resort, which is 20% of your total portfolio. Now, if this doesn't make sense, just pause the video. As I said, take a deeper look into it and it will make sense very quickly. This is your first bag you're using, this is your second bag, and then this is your third last resort kind of bag you will be using. Now, another really good example of this trading style in action was on this brand new Jupiter Launchpad type of token. If you click here, it was off this tweet they purchased it off, and as you can see the cat debt coin here, which is sitting at 115,000 market cap right now. If you go into Axiom Pro, you can see all of the wallets on the chart right here. The one we're going to be looking at is this one here, this little monkey emoji. He cooked around 25 solana on this. Same with Flipping Profits. He was in very early in this, and they both cooked 25 sol and 70 sol alike off a 3 sol buy and a 5 sol buy. So the thing that you got to be doing is getting in early like this and selling very early. You can see even Flipping Profits, a guy with a lot of capital, he's selling at 115,000 market cap. As there's uncertainty, you want to pull your initials fast, you want to be doing these things fast, and you want to be moving fast. The whole narrative was that Jupiter, which is a really big launch pad, has just launched their second token ever. First one went to 30 million or whatever it went to, so obviously the second one's going to go pretty high. Freest narrative of all time. If you're just trading fast and getting out quickly, you will be securing large profits like this of 23 solana, 70 solana, 12 solana here, 5 solana there. It is very simple to print with this kind of trading style. So yeah, my trading style, it's not flashy, but it does make money. Every single month, the top traders that actually dominate the dead markets all have the same trading style. Fast rotations, often cheating, and lots of tokens traded on the day. But here's the thing, trading is 10 times more than just a knowledge game, so there is so much more to it than just that. So in the next video, I'll be teaching you the 7 things that actually got me rich off meme coins, past just what to find in the coin. So make sure you stay tuned for that. That's all from me for now, and I'll see you in the next one.